Welcome back to Trend Tuesdays with AngelouEconomics. My name is William Mellor, and today I'm going to talk about the impressive GDP growth rate that just came out for the second quarter. That growth rate was 4.1%, and that's the highest that GDP growth has been since 2014. So today, we're going to dive a little deeper into that figure. It turns out that in the second quarter, there were several one-time types of impacts that happened that might have led to an uptick in GDP growth. The first being tariffs. Our ongoing tariff discussions have likely led to an increase in exports. And while economists are basically unanimous in the assertion that these tariffs are going to have long-term detrimental impacts to the US economy, we are seeing some short-term gains from it in the form of exports. But it's a little bit like seeing the right thing for the wrong reasons, because that increase in exports comes because purchasers are stocking up on inventories, and not necessarily because they're demanding more, but because they're buying more sooner in an effort to not pay tariffs. In particular, we see that with soybeans. Soybean purchases have gone up by 50% in the second quarter, but the data shows that it's not that purchases are actually demanding more, just that they're buying more sooner. So current estimates show that increase in exports could account for a full percentage point in our 4.1% GDP growth. The second impact is tax reform. Now, in the first quarter, we didn't see much of an impact from tax reform on GDP growth, looking at consumer spending as well as business investment. But in the second quarter, both were up, and it is likely, at least in part, due to tax reform. But some critics say that tax reform, while badly needed, came at a somewhat bad time. Tax cuts serve as a stimulus to the US economy, and well, quite frankly, the US economy doesn't need a stimulus right now. Unemployment is at an all-time low, employment is high, the economy is generally speaking very strong. So, but leading into that gets to our third point, which is government spending. Government spending, earlier this year, Congress passed a budget bill that allows for federal spending that increases by hundreds of millions of dollars. Again, that serves as a stimulus to the US economy at a time when, quite frankly, we don't need a stimulus. So the stimulus, or the government spending, will actually continue to impact the US economy through 2019 because that's the duration of the bill. So you'll see government spending having an effect on GDP growth, not just in this quarter, this past quarter, but over the next several quarters. Whereas tariffs, could drop off just as quickly as they came, and tax reform is a little bit hit or miss right now, but we'll be tracking it on a quarter-by-quarter basis. So the question is, are we on a new trajectory of economic growth? And the answer is perhaps, but likely not at the 4.1% level we've seen in quarter two. Some projections show that the year-end GDP growth rate is going to come out above 3%, something that hasn't happened at all in our decades-long recovery. So what do you think? Do you think that we're on a new trajectory of economic growth, or do you think that this was a one-time deal? Whatever you think, comment below and let us know, and we'll see you next Tuesday. Thanks for watching.